Looking at all the predictions, what do you say? What's going to be the impact of monsoon or poor monsoon on the market going ahead? And how do you think it's actually going to dent the market movement?
Well, good to be with you here today, this afternoon. Well, monsoon, given that we are, still 60% rural economy, it will affect in case we don't have a great monsoon. Thankfully, as versus, about a month ago when we received the first set of forecasts that El Nino could be strong and therefore we are going to be, 94% or so of the long-term average. After that, there has been some, better news from IMD, which has forecasted that the monsoon is going to be, mostly normal, and we'll have to see how, of course, it pans out. We should also hope that in addition to it being normal, that the distribution of the monsoon is also, widespread and all the right areas, receive the rain waters. Um, in case we don't have it, then I would worry about some segments such as, for example, in FMCG and two wheelers and many of the spend with heavier rural tilt. Um, though I must note that in the past, if you look at last 20 years or so, impact has been limited and low and not very high. If anything, the market correction that we have, the period of limited return that we have seen in last 1 year or so may prolong for maybe a quarter or so. But beyond that, I don't see a very strong impact if we have a minor decline in the long-term average rainfall this year versus last year.
All right. So, Hitesh, now going ahead, if I have to ask about this entire financial year, FY24, what sectors do you think so far are doing good and are likely to do good in coming quarters? Also, looking at the FII's inflow, how long do you think this is going to keep our markets pumped up?
Sure. So I mean, when you go through the results that have come out now, and as we speak, more than 90% of the market cap weight results are already out. Banks have done well, and then the commentary from the banks have been positive as well, and something that we have been overweight on. So that is continuing to look good. NBFCs is also looking good to us. Various types of NBFCs, be it the MFIs or the consumer-oriented lending organizations, they are looking good to us. We are positive on automotive. Maybe tractors will have to see depending on the monsoon. But for the rest of them, demand has been healthy.
Hitesh, are you also ruling out a slowdown in auto ancillary in FY24? Is that the sense I'm getting from this answer of yours?
I do think they will do well. I mean, auto ancillaries, first of all, in general, they have a good set of results, in the last quarter and, of course, for the FY23. And the commentary has been positive. And also when we are talking about talking with the OEMs, outlook for the 24 remains positive. Please note that as much as, an automotive business is a B2C business, and inside of the segment that they are addressing, they need to be successful. Auto ancillary does have opportunity to serve many segments and many customers, and they're much more diversified. Plus, they do replacement demand, they cater to exports. So, over taking all of that into account, we do think that auto ancillary is in for a good year.
Let's talk about inflation. You think that RBI has reached a stage where a pause can be there for some more time, and now the thrust will be given on growth, and that's the entire focus of RBI now, looking at the strong grounds we are on right now in terms of Indian market?
Actually, I think you articulated that rather well. That is how we see it going. And in support of whatever you just said, is the fact that the couple of inflation reading in the last couple of weeks have been favorable. The food inflation has been lower versus expected. Overall inflation numbers have been lower than expected, and so on. And therefore, we think that the reasons for RBI to raise the rate in the short term are very limited. And having covered so much of distance in last year, we don't think that that there will be another rate rise in the next cycle.
what exactly are you looking at in terms of numbers, in terms of earnings?
Well, for FY24, we are looking for healthy earnings growth and in the market of 13-14% or so. Please note that for FY24 and FY25, the GDP forecast, at least the IMF numbers for India, are north of 6%, and then they're the fastest among the G20 countries. And all of this is going to get reflected in the India's corporate numbers as well.